Alright guys, so we have gone past the point of no return. The US and China decoupling is only going to get worse. And let's be smart and look through all the headlines beyond the trade truths. Now, beneath the surface, Beijing is done with the US and vice versa. The biggest battlefield is in semiconductors, and this is a vital piece of the AI race, and whoever wins this one will win the next 50 years or more. Now, the US is fueling their gamble with a huge amount of debt. Over $25 billion of debt are tied directly to data centers. Wall Street is now part of this massive gamble. We have nearly $50 billion in data center MBS. This is simply insane. We have a new asset class based on buildings filled with servers and AI chips, and Trump can't afford to lose this one. Now, if the bubble pops, it won't just be the stock prices of Nvidia collapsing, it'll be an army of investors losing tens of billions from these data center bonds. It's so mind boggling. We could end up in a big liquidity crunch where money and credit simply freezes because of the collapse. It will be '08 all over again. Now, China clearly understands this and they actually have a chance to pop the US AI bubble. Trump himself has started the ball rolling by banning both Nvidia's high tech and watered down chips to China. Jensen Huang is getting terrified and he tried walking back his statements that China won the AI race, but even he can't deny the facts. Beijing can play the long game here.
That China has very good AI technology. They have many AI researchers. In fact, 50% of the world's AI researchers are in China. And they develop very good AI technology. In fact, the most popular AI models in the world today are open source models are from China. And so they're moving very, very fast. The United States has to continue to move incredibly fast. And otherwise, the world is very competitive.
Now let's recall the facts. Nvidia went from 95% market share in China to 0%. Now that's not a hiccup, it's a total wipeout of revenue. The world's biggest semiconductor market has been closed off to Jensen. But there's still other chips coming into the Chinese market. Other chips from companies like Intel and AMD are still making their way to China. Chinese revenue is still leaking out. Well, Beijing has decided to shut this down. Regulators have issued new guidelines that simply flip everything. New state-funded data centers will have to swap foreign AI chips with domestic alternatives. Clearly, that refers to American AI chips. Do not use any Nvidia or AMD chips, but use chips from Huawei and Capricorn instead. And we know in China, a ton of data centers, they are backed by the government. So there will be a big swap out coming. And this is going to shut the door on Chinese money flowing to US chip makers. And why is China so confident to cut away US chips? Because they have figured out a time-tested solution to bypass getting all the fancy gear from Nvidia while still saving money. Now I'll make it simple to understand. Yes, Chinese chips are a generation behind the latest offerings from AMD and Nvidia. The Blackwell B200 series are clearly ahead. But China data centers can achieve the same compute power with lower cost cards. They simply string a bunch of them together using chip clusters. And this allows them to achieve the same performance without American tech. It's not really the most elegant solution, but who really cares? We are in a semiconductor war. And this move allows China to accomplish two parallel objectives. Now, they can channel domestic revenue to local Chinese chip companies to boost R&D. Every dollar denied to US chip makers is money used for innovation in Huawei and Capricorn. Secondly, allows for Chinese AI solutions to advance ahead. We will continue to have multiple DeepSeek moments going forward. Chinese AI developers understand it is critical to maintain market share despite the chip constraints. In October, the top 3 AI models in the world are all Chinese. In other words, Chinese tech has completely taken over open source models. They are also more powerful than US models versus those from Google and even Meta. It's weird because the US economy is supposed to be more free market than China, right? Now, free AI models are important, It gets the world used to the Chinese solutions, and then companies and countries they start building products on top of it. Developers will be happy to pay money to DeepSeek and other Chinese models to fully adapt it to their companies and their specifications. And this helps bring more revenue to China's tech ecosystem. Beijing is firing on both fronts simultaneously. And why can they do this? Because the chip war is now evolving to an energy war. China has a far bigger energy grid with cheaper power than the US. Now, energy costs in the US are 30 to 40% higher than Chinese power. The central government is subsidizing their tech giants, so the disparity is only going to grow bigger over time. And this is becoming a battle of energy attrition. Now, just take clean energy alone. They have nearly 340 gigawatts of wind and solar capacity built out. That's over 66% of the world's total. And it gets crazier. According to the IEA, by the 2030s, China's solar power generation alone will exceed the total electricity demand of the US economy. In other words, if nothing changes, it's a wrap for the chip and AI war. Unless the US suddenly achieves AGI or artificial general intelligence and they develop Skynet, it's game over at this point. They simply cannot win the game of energy attrition. Either the US AI bubble will pop by itself, or China cutting off revenue will make it more likely to burst. And that's why we are seeing the Trump administration rushing like there's no tomorrow. And that's why we have this global shakedown for investment money. Why Besson is afraid of the Supreme Court striking down the tariff regime. It's all interconnected. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. This is the danger of debt and deficits to speed run the AI race. US sanctions are also less and less effective, especially in energy. In 2000, China was heavily dependent on power generation using fossil fuels. Over 80% was dominated by oil, gas, and coal, but the picture is very different today. Only 65% of their energy mix is from fossil fuels. Their solar, wind, and renewable build-out is growing faster on both an absolute and percentage basis. And by 2030, it'll probably be 50-50 or even better. So the AI war between the US and China is quite straightforward. The US is gambling and putting all their chips on black. They are betting for some tech breakthrough that will reset the board. China is playing the long game and allowing the US to corner themselves. Now it's fascinating and terrifying to watch all at once because if the AI bubble implodes, it could literally take down US markets and the economy with it. And speaking of decoupling, the dollar is also facing a crisis. Yes, it's from Russia and China working together. De-dollarization is accelerating, and as we said, there's simply no going back now. Russia China trade is nearly 100% de-dollarized, and not just the dollar but outside of the euro as well, outside of Western currencies. According to Selenov, the Russian finance minister, 99.1% of settlements between China and Russia are done in bilateral currencies. And that means payments are done in either the Chinese RMB or the Russian ruble. And the justification is simple to avoid unfriendly foreign infrastructure linked to the dollar and euro based banking systems, basically to avoid the entire SWIFT system. Now, does this affect the Western financial system? Of course it does. Trade between the two countries is beginning to grow, and if Western currencies are needed, there goes the bid for dollars and euros. The Chinese economy will continue to grow at over 4% in 2026. Now, despite the war, the Russian economy will also continue to grow as well. Now, the Bank of Russia survey results are out. Over the next 3 years. Russia's GDP should grow by 1.5% on average. So, expansion will still happen even under heavy Western sanctions. Meanwhile, Russian exports will hit $485 billion by 2028. Imports will also hit 416 billion as well. And who do you think Russia's trading partner is? Who do you think they trade the most with? It's China. So over $900 billion of trade, majority of it is being de-dollarized with China. Whether it's the RMB or ruble, it doesn't matter, it's still de-dollarization. And this is the issue with US threats and sanctions. They always backfire. Now Biden opened Pandora's box and Trump keeps opening new boxes. It's like he can't help himself. Confiscating assets is one thing, but weaponizing the US consumer market also makes the dollarization worse. Russia and China won't break away from each other because the specter of US tariffs is always looming.
I told anybody wants to be in BRICS, that's fine, but we're going to put tariffs on your nation. Everybody dropped out. They're all dropping out of BRICS. BRICS was an attack on the dollar. And I said, you want to play that game, I'm going to put tariffs on all of your product coming into the US. They said, like I said, we're dropping out of BRICS. And BRICS is like, they don't even talk about it anymore. Scott, you want to add to that, please?
Now it's just so bizarre. Trump keeps reminding the world to de-dollarize and avoid US markets just in case. And here's the problem. It doesn't just stop at trade. China, Russia and BRICS now have even less incentive to hold US bonds, especially when the dollar keeps losing value and massive deficits are on the horizon. The debasement trade is meeting counterparty risks. Now, we have officially reached the tipping point. In fact, we have gone past it. Central banks globally have spoken. Gold has overtaken US Treasuries as the top reserve asset in central banks. 4.7 trillion in gold versus 3.9 trillion in treasuries. Now, sure, a big part of it is because of the gold price rising. But then again, why are gold prices soaring? Because there are more buyers than sellers. Supply and demand. It's nothing complex at all. Which brings us back to the de-dollarization argument. China's trade is going to grow, and if they start trading more at the RMB, what is the point of holding US bonds? That's just from a practical point of view. I'm not even talking about all the sanctions yet. The whole country is aggressively buying gold, especially after Trump began his tariff war. If importers and exporters require fewer dollars to operate, then they will earn more in the RMB. And the avenues to store wealth are limited in China. Real estate is still a no-go, while bank deposits or Chinese bond yields, they are way below 2%. So the only credible avenues left are Chinese stocks or gold. Inflows into Chinese gold ETFs are still going strong. Investors can see the debasement trade and they can sense a change in the air. Now, trade with the US will continue to decouple, and Beijing is going to force more non-dollar trade. It's written in the stars. There's no choice. It's to sanction-proof themselves and to put more pressure on Washington. The tariff war is making things worse for the future of US-China relations. Now, in October, Chinese exports to the US crashed by an incredible 25%. It is such a big drop that overall shipments fell by over 1%. The decoupling in trade is getting worse and worse. Naturally, this means dollar trade between China and the US has dropped. Chinese exporters will shift more towards other countries like Asia, the Middle East, and even Europe. And all of these places prefer bilateral trade rather than only settling in dollars. So the crisis gets compounded even further. Now, yes, China and Russia have been moving away from dollars for a long time, but Trump's tariff war is pouring fuel on the fire. Not good for the reserve currency and not good for dollar assets. But let me know what you think. Can China outlast the US in this chip war? And can the US actually reverse de-dollarization? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.